Hello everybody, my name is Kobe Hunter, and before you hear me talk about how IPOs aren't as public as you thought, I think we should hit the streets and see what the people think. So let's hop on over to the business school and ask people there what they think about IPOs. I'll see you guys back in a minute and 23 seconds, or you can just jump ahead. That works too. And now with the magic of video editing, what is an IPO or initial public offering?
I have no idea. Initial public offering, it is the amount of a share that is offered first to the preferred stockholders before the common stockholders.
If I asked you what is the definition of an IPO, what would you say?
Initial public offering.
Initial public offering, there you go. Okay. What is an IPO?
Initial public offering.
Okay, and what does that mean?
That's when a company goes public and they issue out stock for the public market to buy it.
Okay, good job. I'm really impressed. You're doing really well.
Finance guy.
Okay, fair enough. Who do they actually sell it to in an IPO? Is it the everyday guy? Is it hedge funds? Who is it?
I'm not sure. I think it's more public. I think it's more like anybody can buy into it during an IPO because they can go to investors privately, that kind of thing too.
So do you say the average person can buy into an IPO or only super rich people?
I'm not really sure.
A little bit of everything, because I know there's investors who have to invest and spend a lot of money, but I also think everyone can. I don't know if everyone does. I don't buy stock. I don't know. I don't know. Do you?
Hedge funds and all different kinds of wealthy whatever that have relationships with the investment bank.
And we're back. As you can see, even business students at a pretty reputable university don't all know what an IPO is. So today, I'm going to tell you how the IPO process works, who gets the shares, when they get the shares, and how many of the super rich are making a killing off of this. Let's get into it. Let's use Rivian, the electric car company startup, as an example. Rivian wanted to raise more money and gain credibility, and doing an IPO gave them both. Rivian had the biggest IPO since Facebook went public in 2012. Rivian IPO'd at a price of $78 a share, but no one in the public actually paid that price. If you want to know that price, stick around. I'll explain it right after we explain how the process of an IPO works. So this is the process that Rivian would have gone through to get to the point where they were debuting for $78 a share. First step, proposal. They would have various investment banks present proposals of why Rivian should use them for the underwriting and IPO process. They'd then discuss the services, fees, and number of shares and timeframes in this process. Second, Rivian would choose an underwriter. Sometimes companies that are going public will just choose one company, but Rivian chose to work with three: Morgan Stanley, Goldman Sachs, and JP Morgan. Since this was such a big IPO, using multiple companies made a lot of sense. Next step, creating a team. Step 3. Morgan Stanley, Goldman Sachs, and JP Morgan created teams of lawyers, certified public accountants, and other experts to be able to help with the IPO process. Step 4. Documentation. Goldman and the other teams would get tons of information about the company, its financials, and other required documents. This is what people oftentimes think of as the due diligence process. This is making sure that everything people say is the case. We wouldn't want Rivian to be the next Nikola. Step 5. Marketing. Executives and higher up in Morgan Stanley, Goldman Sachs, and JP Morgan will call up institutional investors and super wealthy people and tell them about how Rivian is going to the moon and how they should really want to get in on it before it goes up. They ask around and do a bunch of analysis to accurately predict demand so that they can price the stock at the right dollar amount to get the highest return for Rivian. In this case, they decided that $78 was the price that would meet demand. Remember this, it'll come important later. Step 6, creating a board and processes. They'll create a board of directors and establish how they're going to report their financials each year in accordance with US laws. Step 7, actually issue the shares. This is the part that doesn't happen like most people think. The investment banks we talked about before, Morgan Stanley, Goldman Sachs, and JP Morgan, get to assign shares to investors. This makes sense as the banks assign the stocks to the current investors who own equity in accordance with how much equity they have in the company. But the banks also have a basket of stocks that they are in charge of selling. So they get a bunch of big investors, the super rich, the people who run mutual funds or other investments, to buy the shares the night before the stock goes public. These guys all get to buy the Rivian stock at the $78 price point. So you're asking, what's the big deal? Who cares if they buy it the night before or the day of? Well, oftentimes, once trading opens the next morning, the stock price jumps up a ton. In Rivian's case, the market opened at a price of $106.75. That means if you are an average person who wants to buy in, you missed out on a 37% return that all of those institutional investors and super wealthy people got. A lot of these investors will flip the stock if it makes a bunch of money on that first day to make a quick and easy profit. However, lots of times there are mandatory waiting periods and some investors can't sell their stock. But still, a lot of people do sell their stock in the first couple of days. And $106 compared to $78, that is a huge difference. That 37% could have gone to Rivian instead of the investors the bank sold it to the day before. This money could have then been used for future products or other things for the company to be able to run it successfully and be competitive in the marketplace. So, if the current setup seems to screw the company having the IPO out of billions and prevents the average Joe from getting in, why do companies have IPOs like this? Before I answer that question, if you've enjoyed the video thus far and would like to learn more about the world of business, economics, and finance, hit that subscribe button and leave a comment down below about what kind of topics you would like me to cover in the future. I read all the comments. Thanks again for watching. And now back to your regularly scheduled programming. There are actually some decent reasons as to why. First of all, selling the stock to institutional investors reduces risk. You don't have to wonder if you've priced the stock too high. You've got billionaires offering to give you millions right then and there. A bird in the hand is oftentimes worth two in the bush, as the old saying goes. Second, pricing the stock a little lower than it should be creates positive word of mouth attention when the stock goes up. As silly as this may sound, even if the stock ends up at the same price, the narrative around a company changes significantly based on how the first couple hours of trading goes. If it goes up, the media positively reports about it, and if it goes down, the media negatively reports on it, even if it came in at the same ending price. Since Rivian's stock jumped so much, news outlets covered it as a great success, and that the rising price shows that the company has a great future. This may have even caused people to put deposits down on the car that wouldn't have beforehand. The free publicity that a soaring stock creates is probably worth millions on its own. Thirdly, people aren't perfect. They don't try to price crazy low. Some of the smartest people in the world invest thousands of hours into analyzing companies and analyzing the market and predicting what demand will be. Yes, they oftentimes underprice the stock a little bit from what they think it should be to create that positive press that I just mentioned, but that's like a 10% underpricing, not a 35% underpricing. Sometimes people, even the smartest people, can't predict as accurately as we'd like to think, and they make mistakes. So, thus far we've learned that an IPO is not actually public. In fact, no one in the public ever actually got the opportunity to buy Rivian stock at $78 a share. More accurately, an IPO could be called an initial offering to the rich where they can get a bunch of money and we can get guaranteed cash. But for some reason, that doesn't quite have the same ring to it. But before you click away, you should know that things are changing and IPOs are becoming more and more accessible to the average person. If you are fairly well off and you have an investment account at TD Ameritrade, Fidelity, Charles Schwab, or E-Trade, you may be able to get access to an IPO. All you have to do is call up your representative there and ask if they can get you in. Oftentimes there are requirements to qualify, like a minimum account value with them. But let's say you're not even pretty well off and you still want in on some of that first day pop. Luckily, Robinhood and SoFi are now allowing retail investors access to certain IPO shares at the initial offering price. But just because you can buy into an IPO doesn't mean you should. There are some major risks that are associated with buying into an IPO. There's a lot less data about the company. You can't see the reports from the last couple of years to understand where the company is really at. And the stock could go down instead of jumping up. Lyft went public at a price of $78.29, and it dropped immediately. It has never gone above its initial offering price and is now valued at $15 a share. So if you bought in at the IPO price, you would be deep in the red. The best way for long-term investing is just investing in the S&P 500 for the long term. But if you do want to invest in IPOs, make sure you research the companies you invest in. So, although initial public offerings do allow a company to be traded on the open market where all the public can buy it, the name IPO is misleading, as these companies do not sell their stock directly to the public. Instead, they sell it to the crazy rich and institutional investors. But what do you think? Do you think that the current IPO process is broken? And if so, what would you do to change it? I want to thank you guys again for taking the time to watch this video. And if you like it, hit the like button. And if you think you want more videos like this, hit subscribe. If you have any comments or critiques for me to be able to do better, feel free to leave them in the comments. I really appreciate you guys taking the time to watch this video, and I'll see you guys in the next one.